I'm Andrea Berenfeld with Berkshire Hathaway Home Services Elite Properties. And this morning, we're talking to Drew Ferguson with Movement Mortgage. I think it's time that we get to the bottom of what's going on in this crazy market, and Drew is just the person to help us. In this market, the word strategy is coming into play all the time. Agents are working with their clients to strategize, especially in multiple offer scenarios. So have you been strategizing at all with clients to maximize their loan opportunity? For instance, do you discuss utilizing different loan types or down payment percentages?
Yeah, absolutely. So a lot of people see a loan officer's job as quoting a rate, a payment, and cash to close. My business partner, Mark Collins, and I run TFC Group, and we really don't see ourselves as a typical loan officer, to be honest with you. We view ourselves as loan consultants for our clients. We're responsible for helping create the largest debt that most people ever take on in their life, right? So with that responsibility, from a professional standpoint, we want to also help you manage that debt properly for you and your family, right? Because there's short-term and long-term financial goals for everybody to obtain wealth, and home buying certainly plays into that. Mm-hmm. So it's our job to create those options for you, answer any questions that you have surrounding them, but ultimately you are the ones making the decision for you and your family. So we're just here to give you the information, answer any questions about it. What we like to look at, honestly, is we come across this every single time because people want to know rate. That's what's been drilled into our heads is the most important part of getting a mortgage, which is an important part, but if you think about a mortgage, it's kind of like baking a cake, right? At the very end, putting the icing and lighting the candles is really the interest rate. So if you think about it, the lowest rate with the wrong strategy can actually cost you way more money than a higher rate with the right strategy. Now you might think of me and think, well, that doesn't make any sense. But think about it this way. If somebody's buying their first home and they know they're going to be in the home for 3 to 5 years, and they say, well, I want to pay a point to get a lower interest rate. Well, your break even on that is probably somewhere between 5 to 6 years on paying that point, 4 to 6 years, somewhere in there. So if you never break even on that, it's a waste of money, right? So that's what I say when the lower rate with the wrong strategy can be more costly for you than the right strategy for you.
So I think it's important, one of the big takeaways is just because the rates are increasing, the rates are very in flux right now, assumptions should not be made. If you have any questions on the best way to handle your particular mortgage, you should give Drew a call and he's going to be able to help you with that.